Welcome to Trading Lounge and the gold and silver report for the 13th of the 10th. I wasn't going to do a video today, but we're approaching a little area that I need to just caution about, that's all. If there was going to be a breakdown in the trend to the upside, I need to point out exactly where that's going to be so you can make your own thoughts and adjustments regarding that. This wave 3 to the A, the B and the C here for wave 4 is pretty in line, pretty standard, in line with other markets, well the S&P and the Nasdaq and so on, and they're all trending nicely to the upside. So I kind of expect it to go to the upside, but if it was going to break down and we needed to call all of this just the A wave here, and then look at all of this here for a B wave up here, and then down for this C wave of wave 4 here, which we need to basically eliminate. I just need to point out where that problem is. We've got another little move up through here, but if it was going to fail, then from this low here to this high here, there will be 5 waves, and it could fail from that point. But I also expect it to pull back down here before going back up there again as well. So that I just want to clarify this little area here today, that's all. So it's not a fully blown analysis today, but we'll just look at where we're at with this situation. So this is the 4-hour chart. Here we're considering this wave 4, as you know, 5 waves up for wave 1 and wave 2 here. So then there's 5 waves in this little move here that I'll break that down for you in a moment, but basically 1 and 2, which is completed. Wave 3 here is that top here. Wave 4 is the pullback here, and then wave 5 up here for wave 1. And then we can look for an ABC pattern back for wave 2, and then going up for wave 3 here, copying that up here somewhere. Just label, oops. And of course this wave 3 here, so there will be 5 green waves to make up this wave 3 there, so that's there. But if this was going to fail, let's say, then this would be an A wave here, a B wave here, and a C wave here to make the B wave. So this B wave here, where that wave 1 is, that could just come all the way down here and make a new low at that point. I don't think it's the case, but if it's going to occur at the top here, that's where it's going to occur from. So I need to just make sure that you understand that, and we'll also have a look at silver as well. So just go to the hourly chart just to break this down a little bit. So we've got long trades here. We've had a long trade here. We've taken a bit of a percentage here. We've had the stop here. We've moved the stop to here, and I'm just moving it to here at the time being. So I just really want to focus on this little area through here. So we've also got new long trades in as we talk. We wanted to add on the levels as it moved up. So we have wave 1 here. If you've got wave 1 over here, that works too actually. So wave 1 and 2 here, and then wave 3 there. I'll break that down for you on a tick chart in a moment, and a little ABC for wave 4 here. So in a nutshell, just to think, we'll see wave 5 move up. It doesn't have to move up that far, it just needs to make the top come off here. And because the extension's in wave 3 here, as a rule of thumb, wave 1 and wave 5 can be roughly the same length there. So if we took that up to say 40, then we can just look at this low here. I'll take that to 40. You can make your adjustments at that particular point, and that would leave this down here as well. Come down there as the A wave, the B wave, and the C wave down here. Look, it doesn't even have to come back this far either, but I'll just put it there, and then up from that point. But what we could say at this point, I'll just put my normal little thing in here like this. If the 1900 became the retested resistance, then you know that there would be a breakdown in the trend and would be moving down here further. So if I've got the stop here below the level here, then you know, how do we look after these particular trades in this case here? So I think what we could do is look at taking a percentage here. So let's put that there as a percentage there, and make that a bit smaller. So really taking some profit above that high there, anywhere between 35 and 40. Look, it may even extend up even higher, but just looking at the length of this is roughly to the 40. So I think that's a middle of the road, a balanced view on that. The other point here too for the trading levels is we've got 1900, which is the closest largest number. Then we've got 1, 2, and 3, 10, 20, and 30 that make up group 1. So we could look for a classic trading levels pattern sitting on top of 30 there. So you know what that looks like, which is like this. So if this is the 1930 coming across here, we'll have the arrival, the reaction, the first high above the level, an ABC correction to make wave 2 here in green, and then wave 1 and 2 moving up there. So we can go long back above. Once that 1930 becomes the support, we can go long from that point. So we're looking for the first high above the level, then an ABC pattern. I don't think it will come all the way back down here to, but I have to point it out, but it could certainly just come back to even this level here and then move up from there as well. So these highs, you know, if you take a profit here, then you need to be this second high here. If I can just label that correctly now, we'll move that across for the A wave, the B wave, and the C wave somewhere down here. Right, so that means that we can look to that money that you take off the table can go back in over here, and also too, this will be when this comes up to here or comes up to here. There will also be that a smaller version of that classic trading levels pattern sitting in here as well that you could work. If you're going to work the market, then you could work it from that point. Okay. So yeah, look, in a nutshell, I just had to point out the risk, where the risk lies, and it lies between 1935 and 1940. I think there was the top in a recession then too, wasn't there? So yeah, you can do a couple of things here. You can accommodate the move back, or you can manage the trade. So it just depends on how you feel about it. But I'm going to leave the stop out of the way for this and let that run. We also, as you know, we still want to add on top of 1950 as well. We want to build. We're building trades into the trend. We're doing all the right things at the right time and managing those situations. I'll just go to the tick chart and just show you this little pattern in this space here. Okay, I just want to get rid of those. I didn't see those down there before. I can use those later. This is 100 ticks. That's the wave 2 low. So look, if you've got wave 1 sitting over here, that's okay too. It doesn't really matter. We've still got, this is the main reference point here. But this counts quite nicely between wave 2 and wave 3 here. So we've got wave 1 and 2 in here, and there's, you just have to, you don't take my word, but you pull that apart yourself. But there's 5 waves. There'll be a good lesson for you. There's 5 waves in this structure, and wave 4, so wave 3 and 4. And in commodities, markets tend to extend in the 5th wave. So that's what we're seeing here. In stocks, it's the 3rd wave. But in another way to look at this too, is that the wave 1 is what it is, wave 3 is longer, and then wave 5 is longer. So that's telling me that the market's expanding in every leg. So the market is expanding, it's not contracting. Then from this wave 1 here, you have to have a keen eye, but 1, 2, 3, 4, 5, and then 1 and 2 to here, then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 1 ABC for 2, 3, 4, 5 here for 5 of 3, an A and a B and a C here for this. And we could probably look at this as, let's copy that, probably wave 1 here. It may even be part of the correction, but I need to pull that apart and have a look, but it doesn't really matter at this stage. Well, I suppose it does a little bit, because that looks a bit short for wave 4, so wave 4 could probably come down grab that. Could move down to about, well, basically there. I'll just check on that for us. So that's a 38.2% retracement level, roughly. Get that there and there. Yeah, so that's 38.2%. So there is space for this to drop. But the thing is that it can either drop to the 38.2% retracement level or the wave 4 of 1 lesser degree, which is in here, which it's done. This just looks a little bit sort of ugly. I'll just have to contemplate that a little bit. But we've got an impulse wave here. We've got, this is corrective. That's an A and a B and a C wave here. Yeah, I can look at this now in being, that's also, yeah, that looks like wave 1 and 2 here. And then 1, an A and a B and a C for wave 2 here, then 1 and 2. Yeah, I don't know. It could be done in, yeah, forget that. I'm just, I'm getting into the guessing game. If something's not clear to me, then I need to do something else with it. So, but the takeaway here is that this move here is in 3 waves. So the whole thing is corrective, but it could pull back down to this area here. So all I'm saying is that's a buying opportunity, and don't put your stops too close. Allow that to play out at that point there, and I'll check on that later. I'd probably be able to work this out if I just sort of pondered, meditated on it. So, but I'm not interested in doing that right now. It's sort of, it's not meaningless, but I just want to have a look at silver as well, just on the 15-minute chart. So from the low here, this is a 15-minute chart. From the low here, we'd counted 5 waves up, the same as gold, and then the retracement level. And then we look to go long here. So this is the same here again as well. So in fact, they need to move up 1 degree. So I'll just borrow that. And I'll borrow that, that, and that. Okay, gold will come down because this is going to come down here. That's a wave 4. Oh, it's quite a wide spread in the off hours for this. But yeah, look, 1, 2, 1, 2, 3, 4, 5. Yeah. So that means that gold will do that. Let me just finish this off first. You learn so much by looking at other markets, even though you don't trade them. So it's not a deep retracement level. It's just back down to the previous low here, and then up, maybe a tad lower. But that will take us back to, I'll just save that. Yeah, here we come. But that's okay. It's just splitting hairs, really, isn't it? You know. So we've got a bit of a move down into this space here, but it doesn't disrupt our bigger picture that I wanted to talk about today. So I just want to recap that a bit on the. I'll just go to the 4-hour chart here. So just to recap this a little bit, we're counting 1 and 2 and 3 and 4 to pull back to the 38.2% retracement level, and then wave 5 to the upside. So if you're going to take profit or part profit, then this is between 1935 and 40. We'll take it, and then then we've got this to contend with here. Will it pull all the way back? And the other point here too, of course, is that this can be sitting over here for this as a C wave coming back down here. So all of this making the A wave, the B wave over here, and the C wave here. Now, I know we went through that over here, but sometimes there's 2 or 3 things along the journey that we need to be mindful of, and this is the second one in this particular instance. So, yeah. Nothing I can do about that. The market is the boss. I'm just the humble servant that gets paid along the way if I do my job properly. Okay, adios.